Hi there everyone, FX Major here. Welcome back everyone, welcome back to another video, right? So this video is module 2 of the whole concept of Forex, right? Teaching you guys everything about Forex and teaching you guys everything that you need and have to know about Forex. So welcome back guys. If you haven't watched the first module of this video, then you have to watch the first module of this video, because the first module will explain to you how everything is set out and everything is going about, right? So this is the second module of the whole concept of Forex and teaching you guys everything you need and have to know about Forex. So another thing guys, before we can start and proceed or rather continue, make sure that you subscribe to our YouTube channel. If you haven't subscribed to our YouTube channel, make sure that you subscribe, hit that notification bell to get notified once we upload, right? Because we are planning on uploading more videos that will be of high value and high help to each and everyone who wants to start making money and wants to start learning from us, right? So subscribe and hit the notification bell to not miss out any single video that we'll be uploading, right? Okay guys, as you can see, I had already had my trade here. I had already had my trade, or rather my analysis prior, right? This is the analysis which I have made. As you can see with this picture here, this is what I have analyzed or rather anticipated that USD will do, and therefore this is what it actually did, right? This is what it actually did. It respected our setup, it respected everything that we have anticipated and analyzed, right? So this screenshot or other picture is a proof to you that most of our setups are high percent accurate, right? Because I actually was planning on taking it to this level here, but however it rejected at this point here. I will even show you a screenshot, which is this one here, whereby we managed to close our trades, right, on USD JPY, right? So this is the US dollar Japanese yen. So with this strategy, we managed to actually milk the market and be able to make profit, right? So I'll be actually teaching you rather showing you how we actually managed to analyze this full setup, or rather this full analysis, and start being profitable, as you can see here, right? That's what we'll be doing on this video. So this is the second module, whereby I'll be teaching you guys everything that you need to know about Forex. As I've said prior, that we'll be having the third and the fourth module, right, whereby I'll be going deeper and deeper and deeper and deeper into making you guys understand and fully know how we actually do this and why we actually use this type of setup to be profitable, right? So I'll be doing module 3 and module 4 that will go deeper, because module 1 and module 2 is mainly focuses on giving you at least the basics and somehow the advanced side of things, right? So you guys can see clearly what we do and how we do it, so that when you watch module 3 and 4, you do not get too confused, or rather you do not get confused at all, because you would have had the knowledge from the module 1 and module 2, or rather just the knowledge from module 1 and module 2, right? At least some understanding before we can go to module 3 and module 4, which will be the advanced, or rather the deeper sessions of this whole modules, right? So on this video, I'll be actually doing that up. I'll be actually analyzing with you guys from a daily time frame to show you how we actually managed to see this trade and managed to take some profits on this trade, right? As you can see, this was 100% accurate trade. It didn't even hit our stop loss level, and it showed to the upside, giving us those good profits, right? So I'll be doing that. And guys, if you haven't watched the gold analysis trade, we have to also watch it, including the GBP USD trade, right, which we have just uploaded prior. Which of those videos, or the GBP USD video, was a sort of a live trading, or rather showing you how we actually see the market in a full view, or rather a full scale, right? So actually make you be advanced whenever you start analyzing and being independent and start trading on your own, right? So let's get into business, guys. Let's jump into the market and do not waste any further time, right? So I'll just remove all these drawings that we have here. Let me just remove all the 14 drawings, because we can see that the market was moving in a beautiful structure, right, giving us those beautiful buying moves, which led to this huge candlestick. Remember, guys, that this candlestick was created yesterday by NFP. Remember that NFP, this week's or this month's NFP was on Thursday instead of being on Friday, because on Friday is America's Independence Day, or rather bank holiday. All right, so the market won't be moving that much today because of what's happening in the USA. All right, so hence why we had NFP on a Thursday instead of having it on a Friday. So this whole move here was influenced, or rather it was from the NFP which we had, right? So let me just remove all these drawings. Okay, so I'm starting afresh and making you guys see the full view and analysis. We will go to the daily time frame, right? So with the daily time frame, remember, guys, that with the daily time frame, we are actually looking for the overall market structure, right? How the market is doing, how the market is moving, which direction the market is taking, and everything we need and have to know about the market before we proceed, or about before we can jump into analyzing and getting those trades, right? So the first thing we can look at, or rather look for, is our change of market structure at this point here, right? Change of market structure, change of market structure, and change of market structure at this level here, which resulted to being a consolidation, right? As a form of consolidation. So since we know, or rather have this as our change of market structure, we know that the market is actually moving in a different type of formation, right? In the previous video, or rather in the GBP/USD video, we managed to have this type of a change of market structure, right? We managed to have this form of a change of market structure. Which was what you call an inverse head and shoulder, right? Of which whereby I explained the change of market structure and what influences the change of market structure, and also what we can actually anticipate and get from the change of market structure, right? So with this here, let me just remove this drawings. Okay, so just leave this one here. So with this, we can see this is a form of a trend line, right? Or rather a moving trend, whereby the market shot to the upside, it came to the downside before shooting to the upside, right? Which is not much of a beautiful change of market structure to us, because when it comes to change of market structure, we are actually looking for something that will give us good moves, right? Something that will give us beautiful market conditions, beautiful market structure, beautiful everything about the market structure has to be beautiful about it, right? And I've also explained that as soon as we have a trend line which will break, or rather give us the change of market structure, we won't be having those good conditions, right, or other trading conditions, because it's not that what we are looking for. It's not what we are looking for, because we are looking for something that will give us high assurity that the market will move in the beautiful structure, right? Okay, so let me just as I've explained here, let me just leave them, because it will actually explain. I'll go back to it because it's something that we have to look deep into, right, before we can continue analyzing further. So since we see that this was a change of market structure, we would have anticipated for a slow move to the downside, right? bit of a slow move to the downside instead of having a beautiful move to the downside, right? We would have anticipated to have at least an impulse, retest, impulse, retest, impulse, retest, and impulse, and retest, right? So what do you mean when you're talking about an impulse, right? With an impulse, we are talking about something like this, where the market will move in this type of formation, and then shoots to the upside. This is what we call an impulse, right? This here is an impulse. This is an impulse, right? This is what we call an impulse. All right, this is what we call an impulse. Okay, that's what we call an impulse move, whether to the upside or to the downside. So an impulse move is basically a shoot of a move, right? Or rather a shoot to the upside or a shoot to the downside, right? That's what we call an impulse move. It's a shoot to the upside or a shoot to the downside, right? So as you know that we have to start from a daily time frame, which is what we have here. So therefore, let's continue with placing our zones, right? Our levels where the market is reversing and creating beautiful setups, right? So if you guys don't know more about what I am currently doing, make sure that you watch our previous videos, as I have explained on why we place these zones, right, and why we place these levels, right? I have explained on why we place our zones. And the reason being why we place our zones, right? The reason being why we place our zones is because we are looking for where the market rejected, or rather where the market reversed, right? Because that X is a way of revealing to us, or rather showing us how it's going about, right? On how it's going about, because we are looking for confirmations before we can plan on taking any further trade, or before we can plan taking any further direction or any further analysis, right? So this, what we are doing here, is actually, it's basically something that will give us an assurance of what the market is doing, something that will give us an assurance of what to expect in the market and when to expect that thing to happen, right? And how and what will make it to happen, right? Hence why we put our zones. Our zones are actually high significant zones which make it to happen, right? Hence why we put our zones. Our zones are actually high significant zones which we should highly cater for and highly respect, because the market respects those zones. So if the market respects those zones, there's no need for us to go against what the market respects. We have to follow and go accordingly to what the market respects. If the market respects a certain setup, we should also go with that and also respect that certain setup. If the market respects a certain pattern, we should also respect that certain pattern. We should not go against what the market is respecting, or rather what the market is giving us or showing us. Whatever the market is showing us, we should follow that. Whatever the market is giving it to us, we should follow that, regardless of what we may think or what we may feel, right? Because the main aim is to make money. Therefore, in order for us to make money, we should follow what the market is showing us and not against it. As soon as we go against it, that's where we lose everything. As soon as we go against what the market is showing us, that's where we lose everything, because we'll be doing things out of our own emotions, or rather own feelings, or how we think or see, without knowing what to actually look at, right? So we have to follow what the market is showing us and revealing unto us. Hence why we have our horizontal lines. Our horizontal lines are actually an indication to us to see how the market is respecting some certain things or other certain levels, in order for us to also respect those levels or other certain levels, right? Because if we do not have those levels, then it means that we will be going against the market, right? So it's better for us to see and know which levels the market respects for us to actually know what to do next, right? So seeing that I already have my zones, what I can do now is output my trend, right, which will reveal to me how the market is actually doing. All right, I'll just clone this one, which will reveal to me how the market is actually doing and which direction the market is actually going, right? And then we put our trend line at this point here. And then I'll just clone it, and then I'll explain to you why I'm putting this zones at this point here. Okay, so currently we can see how the market is moving, right? We know the direction of the market, that the market is in a bullish trend, right? It's in a bullish trend because of this bullish momentum and also this bullish move to the upside, right? So seeing that we have a bullish move to the upside, the reason being why I placed two of my bullish trend lines is because that something that you have to know about trend lines, guys, right? Trend lines react in a certain form or in a certain way. So we have trend lines to actually cater for the trend of the market, but however trend lines also react in a certain way because of how the market is being influenced or how the market is actually moving, right? Because in some cases I would expect that my trend goes from this point to this point here and not this point here. Reason being that we are looking for touches, right? Reason being that we are looking for confirmational touches, which is the first touch, second touch, and third touch. So if you do not have those touches, then the market is invalidating the setup on its own, or rather the trend, right? So the market is behaving in a different way, whereby by removing this trend line, I would say that this whole move was an expected move, right? And this here was our level of influence, or rather manipulation, because we can tell manipulations very simple, guys. We can tell manipulations from miles away. This level here, or rather this candlestick here, is a form of a manipulation. So this manipulation here created an unpleasant structure, or rather market movement, right, which led into the market having this huge manipulation, and this whole manipulation led the market to actually having an impulse move to the upside, which is a false impulse move to the upside, whereby we call this a false breakout, right? Let me just remove this because it will confuse you a bit. So this here is what we call a false breakout, a huge false breakout, right, which takes a lot of people out of the market and makes them lose quite a lot of amount, because it's a false breakout. It's a false breakout. This is what we call a false breakout. Why? Because of this manipulation here. If it wasn't for this, we would have taken our trade or our trend line and said that, okay, so since we have this change of market structure, we'll just join it to this level here. Because why? Because there's no manipulation which was expected or rather experienced, right? But since there was a manipulation which was experienced which we had, therefore this is no longer counted as a trend line, because it's on its own, it's a manipulation. If we include it in our trade, or rather in our trend, then we will mostly lose our trades, because we would actually follow this and also clone it to a different trend, whereby we will start losing money, right? So we remove this because we do not want to see it or rather use it as a trend, because as soon as you misplace your trend lines, that's where you will get it very wrong. That's where you'll get the whole setup wrong, because you misplaced or rather misused the setup which you were seeing. All right, we follow the market condition, or rather we follow the market direction and not its manipulation. The market manipulation, it's not the market's direction or the market condition. right, which the market will follow. The market will follow its own structure, as it has shown us and proved to us that this structure should be trusted and should be the one that should be followed, right, not the manipulation. Because if you follow the manipulation, that means we're going against the market, right? Because the manipulation is an influenced control of the market, right? It influences the whole market, right? So the market doesn't follow the manipulation, because the manipulation is manipulated on its own. It's a manipulation, hence why it doesn't follow it. Because if you can follow right people in your life, what would make you follow people who are doing wrong things, who are doing, you know, stupid things? There's nothing that will make you do that, because you are in the right path, right? You are in your own lane. So that's what I am actually trying to explain to you guys, that this here is something that shouldn't be catered for, right? It's something that shouldn't be catered for, right? Hence why we are ignoring it and putting a trend which the market is actually showing us and revealing unto us. Remember guys, that I'm not yet deeper into this, and this what I'm explaining is not deep. I know a lot of you guys will be saying, Major, is this module 3 or module 4? It's like you're getting deeper now into things, you're getting deeper and you're starting to confuse us. No, this is just module 2. I haven't even gotten deeper yet. The session will be deeper, it will soon come, but this is not the deeper level of analysis, right? It's just the touching the waters, right? Testing the waters, so you guys can at least have a clear view on how the waters are like in terms of temperature, you know, so you can know if the waters are hot or they are cold or they are just lukewarm. So this is not me getting deeper, guys. I'll get deeper, trust me, I'll get deeper, and you guys will get the full knowledge and full understanding of everything. Because in order for you to start being profitable and start trading with Forex, you shouldn't just take those light setups, because the Forex is deeper than you know. You can take those light setups and make $10 and make, you know, small amounts. So when you're talking about getting deeper, we're talking about making good amounts of money, right? Good amounts of profits. That's when you start getting deeper. Right? So I haven't gotten deeper yet. I will get deeper as time goes on, or rather on the third and the fourth module. So the third module will be us actually from the shallow end taking it slowly to the deep end, and then module 4 will be the deep end, right? It will be the deepest end, right? So I need you guys to actually watch all these modules to actually get a full understanding on how we actually do this, right? Watch all the full modules from module 1, module 2, module 3, and the last module, which is module 4, right? Watch module 1, 2, and 3 and 4. And by you watching module 1, 2, and 3 and 4, I'm not saying that you should watch it for just washing your eyes or just moving your eyes through it. Watch it, back test it, repeat, continue watching it until you fully understand, because this thing should be installed, or rather instilled in your mind, so that even when you sleep, you know that if the market does this, you should do this. If the market does this, it's because of 1, 2, 3. If the market do this, it's because of what influences it or what affects it, right? So do make sure that you continuously watch these videos and watch all the videos until the end, so you can get full knowledge, full understanding, and also get deeper when you start analyzing on your own, right? So these videos are actually there to help you, but not only to help you by you just washing your eyes and just passing through it, and as if it won't be of beneficial to you. These videos are not there to actually make you watch the one video, or rather watch the video once and be like, okay, I can do it, without actually back testing the video, watching the video continuously to actually install it into your mind and know fully what to do and what to expect, right? Because a lot of people are using different setups, or rather using different strategies, which are actually helpful to some of them, but some of them I don't think they are helpful to them. So hence why I'm trying by all means to actually make these setups much more simple to you guys, for you guys to actually understand and fully know what to do. Right, so with this we can actually start proceeding with what we are analyzing, because I've explained to you the manipulation, the influence and all those things, right, and why we are actually leaving out the influenced, or rather the manipulation which we had at a certain level there, right. So moving forward, since we now know that we have to leave behind this manipulation, because as soon as we include it, it will start messing up our analysis and start messing up our setup, and we do not want that. We do not want a setup which will be messed, because we will be using that setup to trade. Right, we will be using that setup to trade. So if the setup is messed up, it also means that our trades will also be messed up, and that's something we are not looking for, right? That's something we are not looking for. So proceeding, we can actually tell that this level here is a level which we are not taking into consideration because of its manipulation, right? So now, since we know that, we can now proceed. Let me remove this one here. Right, let me remove it. Okay, so seeing that, are you aware that, or rather are you looking at this as a beautiful setup, or rather a beautiful market structure? Because if, for example, we have included this here, right, and for instance, let's clone it. We would get the same setup, right? We would get the same setup, but with a different view. Are you understanding what I'm saying? You would have gotten the same setup, but with a different view. Reason being that we have this here, our zone, right? Trend zone, and we have our trend zone here. But look at this. Look at this manipulation here. Look at this manipulation here. Do you think that at this point here, or rather if we placed our zone here, we would have had confirmation of a certain trade? No, because we would have waited for the trade to actually, from this point here, we would want it to come to this point here, right, before it continues to the upside, right? So are you seeing what I'm talking about, guys? Are you actually seeing what I'm talking about? We would have waited for the trade to actually come to this point here before shooting to the upside, which would have messed up everything, because the trade on its own, or the market on its own, is respecting this here, which is this setup here, which is this trend here, which is that trend there. So this is actually a proof, or rather a revelation to you, to see that most of the manipulations, do not think that those manipulations are part of the market condition. Do not think that those manipulations are part of the market on its own, or rather the market direction. Most influences which the market gets, right? Most of the influences which the market gets, it gets from the manipulations, right? So most manipulations get influenced by its factors, a lot of factors, right, which makes those influences have to actually have manipulations to the market, right? So a lot of factors are actually influencing the market to have manipulations, right? A lot of factors. So if, let's say for example, we included this here, this manipulation here, as our trend setup, it would have been invalidated a long time ago, right? So we'll cancel it out, because we can see that it's a sure proof to us that there's no manipulation which we should include in our setup, because as soon as we include the manipulation, then we won't be able to make money, but instead we will lose money, right? We will lose a lot of money. So the aim is to make money and not to lose money. So as you can see here, that we have this respected setup, right? Another thing which we should also focus on is the trends in trends, right? So from this zone here, we have a beautiful trend here, right? Okay,
I see this as a beautiful trend, but however, let's follow this one, which I will also explain to you why we are following that one. Okay, then we have, it's at this point here. All right, so this is what we call trends in trends, guys, right? So with trends in trends, we actually see the full view of the market in the current time, right? In the current time. So the reason being why I placed my zone here is because of there's another manipulation here, which we can see at this zone here. It's a second manipulation which we are seeing, right? Which should not be considered, or rather be included, right? Because reason being that once we include it, then this what you call this retest is an invalidated retest, right? But it's not invalidated because we can see that retest, right? Hence why we have to remove this and make it not to be part of our setup, right? Then moving forward, we also have our trend which moves from here to this point here. Let me just clone it. You see how beautiful this is, guys? This is a beautiful setup, which you should like. It shouldn't be hard for you to actually see this beautiful setup, right? And then you also have a current trend which we have here. Then we clone it. Remember, guys, that we are still in a daily time frame, right? We are still in a daily time frame. Okay, so seeing that we have trends in trends, we can now have confirmation and have knowledge that we are looking for a proper setup, right? So moving to a 4-hour time frame. Moving to a 4-hour time frame, we can see that the market actually respected the setup in a good way, right? It respected the setup in a much more pleasant way. The previous setup was respected, or the previous setups were respected, right? Which is what we are actually looking for, or rather looking at. So moving to the current setup, right? Moving to the current setup, we can see that we have this trend here, which we had a beautiful move to the upside, right? Move to the upside, beautiful move to the upside until the market began to start going to the downside, right? To start going to the downside and giving us a form of market condition, right? So me, by looking at all this, right, I was able to actually see something that a lot of people won't notice, right? I was able to see something that a lot of people will take lightly to see, because remember, as I've said, that we are looking for what the market will give us, right? Or where the market is going and what the market is showing us, right? So we have to fully follow what the market is showing us, follow what the market is giving us, follow what the market is actually doing for us, right? Instead of going to its opposite direction, right? So seeing that we have a beautiful bullish momentum, or the bullish move to the upside, we also have a bearish move to the downside, right? And after the bearish move to the downside, we had a breakout structure, right, which led to us having a bit of a consolidation until we got a move to the upside and a move to the downside. What I was actually referring to, like a lot of people won't notice and won't actually see, is this here. Okay, let me just put let me just look for it so you guys can actually see. It's not this one. so you guys can actually see what I am actually referring to, right? What I'm actually referring to. Okay, there's something which is called a pennant, right? Let me put it here and then put it here, right? Something which you should actually see or rather consider is that the market is actually squeezing price, right? The market is actually squeezing price to its smallest form, right? The market is squeezing price to its smallest form, meaning that as the market squeezes price, we will be having a consolidation level or have a consolidation until a certain breakout, right? Until a certain breakout, and then that's when we will have our confirmation of a trade, right? So we might have a breakout of a push to the upside or a breakout to a push to the downside, right? But seeing that we have this double bottom formation here, we know that the market, as soon as it comes here, it will actually shoot to the upside, right? Because we have this first bottom, second bottom, and the third bottom, which is what actually gave me high confirmation. That's what actually gave me high confirmation of a buying trade, right? It gave me high confirmation to actually push with those buys, or rather push for those buys, because as soon as I saw that, I knew for sure that the market actually has to respect its own setup, which is showing me, right? The market won't show you something that it won't respect. It will show you something that it will respect, right? So as soon as the market shows you something that it will respect, it will surely respect that, and that's what you have to follow, right? So I've seen this with this bottom here, and I knew that the market has to actually shoot to the upside. But before the market shot to the upside, I was a bit skeptical, thinking that what if the market is trying to create this bottoms here, and then it decides to actually push to the downside. But something that gave me confirmation was that this zone here, right, it's something that gave me a high confirmation, because one thing we can look at is that this zone here on its own, right, it's its lowest zone, and the market is not aiming to actually push much more lower. That's something the market is not actually planning on doing. It's not planning on pushing itself to its lowest low. That's something you have to understand, guys. As soon as the market is in its lowest low, it will take time for it to recover. So therefore, instead of pushing itself to its lowest low, it will try by all means to actually push itself to its higher high, even though it will create those higher low and higher lower highs, but it will not reach this zone here. You understand me, guys? It will try to not reach its zone here. So that's what actually gave me an assurity to a maximum. My assurity to a maximum, it was because of this level here. I instantly knew that the market it tried to actually go to the downside, but it's failing. It does not have that momentum, or that thing that will make it to push to the downside. It's not looking forward to go to the downside, hence why it's trying by all means to push to the upside. That's one thing you have to know, guys. Whenever you analyze, you have to know the market condition and what influences the market and what makes the market to move in its certain direction or in its certain way. All right, so the market, for sure, I knew that the market here, it won't come. It will try, but it will never reach there unless there might be a manipulation. That's the only time it can get to that level, or rather get to that point, unless there is a manipulation. Because what it's actually chasing this high here. That's what the market is chasing. It's chasing this high here. That's what it's actually chasing. It's chasing that high there, right? That's what it's actually chasing. So seeing that the market at this point here shot to the upside and tried to reverse at this point here because of this consolidation level, right? Because of this consolidation, hence why the market is still in this level here, because of the consolidation. But overall the market is trying to reach to that high there. Let's go to a daily time frame and try to explain to you how I'm actually saying this. As you can see, the lows, it has been on its lowest low, right? And since it has been on its lowest low, it's not planning on going back there, because there's high chances of that it will shoot to the upside. Reason being that we can see with this overall direction, which is a bullish direction. So that's a high confirmation to also that the market is actually trying to push to the upside. And another thing which I forgot to tell you is that this lowest low here was a manipulation low. That low there was created by the manipulation which we saw at this level here. This level here created a manipulation at the zone here, which created this lower low. So since that the market is not following its manipulations, as I have explained to you, since the market is not following its manipulations, it follows its own condition, or rather market condition. It's following its own market condition. So that's what you should know, guys, that as soon as we see a manipulation, do not cater for that manipulation. It's a manipulation on its own. You just leave it as it is. You just leave it as it is. Right? So as I've explained, that this manipulation here should be something that should not be considered, right? Hence why I'm saying that the market will not come to this level here, because it's a manipulation level. And as I've said, that the only time that the market might get to that point there is only, I repeat, it's only because of a manipulation. In case it receives a manipulation, that's the only time it will get to that point there, or rather it will get to that level there. Besides that, we won't see the market coming to this point here unless there's a manipulation, right? So following this overall market structure, which is a bullish market structure, we can go back to the 4-hour time frame. Going back to the 4-hour time frame, we are following what we know now. Now we know the market condition, the market direction, and everything about the market, right? We know everything we have to know, right? So looking at this, we now know that it has to shoot to the upside, whether it likes it or not. It has to shoot to the upside, because it should respect what it's respecting and what it is showing us, right? That's what it should respect. It should respect what it's showing us and what it is respecting. If it wasn't respecting its setup, it would have came to this point here, this manipulation zone then, if it wasn't respecting its setup. But because it respects its conditions, its setup, therefore we should also respect that, and it should give us what it is respecting, right? It should go to the direction, or rather go to the move it is respecting, right? Unless there's a manipulation. If there's a manipulation, that's when we can see that, okay, this happened because of the manipulation, but however, let's still follow what the market is showing us, or what the market is giving us, right? So this is not that hard, guys. It's actually not hard to actually understand, but I would advise you that you continue watching this video until the end, back test the strategy, and watch this video, watch it without any hesitation, because it will be of so much help to you guys. This is the second module, but already I'm showing you how the third and the fourth module will be. Already I'm showing you what the fourth and the third and the fourth module will be like. Already by doing this, I'm actually revealing to you and showing you what the third and the fourth module will be like. So make sure that you watch all the modules, share with your family, share with your friends, loved ones, to actually make them to also be part of this winning family and learn completely for free, because most of my YouTube videos are for free. There's no need for you to pay anything or subscription fee for you to watch the videos. It's completely for free, so you start learning for free, right? So So with this manipulation here, we know that we should not cater for 8, right? But instead we should cater for this. As I've said, that this manipulation is not considered, right? We consider this here where the market is supposed to reach. Okay, so since now we know how the market is moving, or rather how the market is respecting setup, that's the reason why we actually managed to see our beautiful buy trade, right, which resulted to us having this here. Right, this is what I'm actually planning on seeing. And then as soon as the market actually breaks this level here, which is our pennant, right, it's our bullish pennant, right? Why is it our bullish pennant? It's because it's going to the upside, right? It's going to the upside. As you can see here, it's moving to the upside, but it's a consolidation pennant. The consolidation is a move of a sideways action, right? It's a sideways action where the market moves in a sideways, right? As you can see here, it's a sideways, right? A sideways action. But with this sideways action, or with this consolidation, it's squeezing price inside, right? The price is getting squeezed inside like nobody's business until a certain breakout, which is what I'm actually expecting, right? So from this point, it's actually simple to see that we are actually in a proper and good setup, right? Let me just put it here. Anyway, it's fine actually, because the market will actually respect that setup. So looking at this, let me just put it this side, right? Put it here at this point here, and then put this one at this zone here. So this is what should be expected, or rather this is what is expected for USDK Pro to do, regardless of anything. This is what's actually expected for it to do, right? Let's go to an hour time frame. With an hour time frame, we can see that yes, our level is a consolidation level, whereby the market is yet still to move to the upside and shoot to the upside, right? And as soon as we have a breakout here, that's when we'll shoot to the upside, right? So guys, do make sure that you watch module 1, module 2, module 3, and module 4. Keep on watching those videos, watch them until it's installed, or rather instilled in your mind, so that you don't even forget once you do anything. You don't forget about it. You are not forgetting anything that you have learned from the modules, right? So this is the second module. We're actually analyzing how I actually managed to get my trades into being good trades and profitable trades, right? So let's make money make sense, guys. If you haven't subscribed to our YouTube channel, make sure that you subscribe, hit the notification bell to not miss out on any upload or any video once we upload, right? So let's make money make sense, guys. This is FX Major, your mentor.